Hi everyone, my name is Selena Castanos and I will be moderating today's webinar. I will begin by introducing the Capital Pathways program. Then I will introduce myself and give the word to our guest speaker, Ford Scott, who's a lender relations specialist based out of the Richmond, Virginia USBA or Small Business Administration District office, who will introduce himself and take us through a presentation on SBA loan options. Feel free to ask any questions through the Q&A function throughout the presentation. We will be responding to them as we go. The questions that we cannot respond to in this webinar, we are happy to address through our 101 no-cost services or connect you to resources that can help. We will share a recording and slides of this webinar afterwards. So what is the Capital Pathways program? It is a program funded by the U.S. Treasury SBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity and hosted by the Virginia SBDC and George Mason University. We can start with the program overview, then we will go through the program eligibility and finalize with its services. Capital Pathways is a no-cost, specialized SBDC program that helps small businesses build the habits and resources they need to become capital ready. Why does it matter? Being capital ready matters because those less prepared self-select out or fail applications. Early failures correlate to lack of adequate capital. Higher cost alternatives don't build long-term capacity, and only half of requested amounts reach small businesses. To put things in perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, just 20 to 30% of those who apply for loans actually get their loans approved. Capital Pathways creates a path to financial and legal readiness. It does this by immersive, hands-on group experiences and training combined with one-on-one support. Who is eligible? Very small businesses at any stage facing challenges accessing traditional financing. The services that we provide include a guided self-assessment, legal structure validation, financial skills and tools, and loan application readiness. And I'll go into more detail on these in a little bit. So the guided self-assessment. With this assessment, we can detect, identify your business key gaps so we can connect you with the right tailored resources, either through our Capital Pathways program or other resources that can help. Under our legal structure validation, this slide, our in-house advisors can help you through more basic questions, and we partner with a law firm which can help you for more complex topics related to business registrations, trademarks, contracts, and agreement reviews. We also offer financial webinars on topics including financial basics, financial statement preparation, and QuickBooks training. Another one of our offerings includes one-on-one individualized and tailored support on business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, and loan readiness and lender prep. But it's not just these topics. We can help in other topics that you need help with. Finally, our loan application readiness services include both webinars and one-on-one individualized support. The webinars are on topics such as what lenders look for in loan applications, interactive mock loan interviews and sample applications analyses, and SBA loan options like today's webinar. We also have a partnership with a lender that provides no-cost one-on-one advising and support preparing loan packages. Now over to introductions. As mentioned before, my name is Lina Castanos and I am today's moderator. I have a professional background in economic development, small business support, and access to finance projects both domestically and internationally. I am currently both a program lead and a business advisor in the Capital Pathways program. Today's presentation will consist of a 60-minute presentation. Again, feel free to ask any questions throughout the presentation via the Q&A function. We will be responding to them as we go. We will also leave some room for questions in the end. The questions that we cannot respond to in this webinar, we are happy to address through our no-cost one-on-one services or connect you to resources that can help. We will share a recording and slides of this webinar afterwards. Now I will give it over to Ford to introduce himself, tell us a little bit about his background, and start his presentation. I will let you share your screen now, Ford. You may take.
Hey, thank you, Lena. Can you see the first slide? Yep.
Yes.
Okay. So I told Lena we have connection problems here, so I'm just gonna wave to you. You can see my face. Not that you'd want to see my face through the whole webinar anyway, but just to say hello. I am what they call a lender relations specialist with SBA. You'll see later our office covers all of Virginia except the Northern Virginia area, but even for that area, you're welcome to reach out to me and I can potentially connect you to someone there or lenders there. My role is to mostly help lenders understand our lending programs and help them navigate the process, which ultimately would help with small businesses obtaining financing. So I'm going to turn my camera off now. And you should see the first slide there. So you'll see our lending programs mainly run up to $5 million. We're going to cover some subsets of that in a minute. You'll see there's our district office webpage. So we also have other upcoming events, webinars, et cetera, that you might want to check out there. So just to begin with, I wanted to just mention, so we do not offer grants of any kind. You may hear that. I don't know if anybody watches television anymore, but there used to be a guy on late night TV who would tell you, that grants were available from the federal government. We do not have any grants to help small businesses either start or grow a business. We don't generally lend directly to small businesses, except we do have a direct disaster lending program. So if you ever happen to be affected by a tornado, I don't know if you have earthquakes that often in Virginia, but some sort of storm, you may be eligible under that program. But generally, most of our lending is done as a guarantor. So SBA provides a guarantee to commercial lenders. They actually lend you the money, and SBA will step in if the small business borrower defaults and reimburse the lender for a portion of their loss, which is our way to encourage lenders to lend to small businesses. And that guarantee, you'll see at this last bullet here, can help offset the risk for startups, potentially. Well, the second item there, insufficient collateral, is probably the primary reason that lenders use our program, is that you have a good business, they show repayment, but there's a shortfall in collateral of some kind, and we're generally fine with that. Potentially, the lender could extend your maturity out to a longer term. We allow longer terms generally than are allowed conventionally, so that could help you as well. And then the lender may have some discomfort with the industry that you're in, and because they have the guarantee, they might be willing to lend to your business. So Lena made a comment. We did a run through last week on this. I tend to put too many words on slides, so I'll just apologize for that. But if you just listen to what I say and don't get too caught up in trying to read the slides, you'll have the slides later to consult with. So don't worry about all the information here, but I like to be upfront. So again, this slide has too much on it, but we want to be upfront about who is eligible, or who's actually ineligible for SBA financing. So an SBA loan cannot be used for nonprofits at all. The second item is a frequent inquiry. An SBA loan cannot be used to finance investment real estate of any kind. So you can't have somebody that has an apartment building, a shopping center, maybe a mobile home park, anything where the business wants to buy real estate and then lease it out to someone else. We don't allow any of that. Now, if you want to buy a business or construct a building for your own business, and you will occupy a certain percentage of that building, generally we start at a requirement of 51%, then you would be eligible for that. But just what we call investment real estate is not eligible under any of our programs. Businesses that have a pyramid or multi-level sales distribution plan, I guess the old example of that used to be Amway. I don't know what the current example of that is, but those are not allowed. Of course, anything that's illegal on the federal, state, or local level is not eligible. So, in some states, marijuana is legal, but federally it is illegal. So that is not permitted under any of our programs. However, we do allow, if you happen to be in the hemp industry or CBD, as long as the level of that does not reach what is that THC level that would make it illegal, it should be eligible. You can't have a business that restricts patronage for any other reason than capacity. So you can't have a men's only or women's only health club, something like that. In fact, in order to be eligible for SBA financing, they have to provide both a men's and women's changing room and restroom in order to be eligible for our programs. And then you can't have a business that has an owner, we call them an associate, who is currently incarcerated serving a sentence of imprisonment or is under indictment for a felony or any crime involving or related to financial misconduct. Also, if you have a prior loss, any prior loss related to a federal debt, so that would be a home loan, business loan, etc. If it's currently delinquent or there was a charge off, you will not be eligible for an SBA loan. And then the final thing here, there's a policy now where our financing is limited to businesses with 100% direct and indirect ownership by either U.S. citizens, U.S. nationals, or lawful permanent residents. And the lender will be required, if you're not in one of those three categories, well, actually, lawful permanent resident. If you're a lawful permanent resident, you have a green card, the lender will be required to obtain some documentation from you, which will be sent to the USCIS to confirm that you're in the United States legally. So the next three slides are going to give you a short overview. We have three main lending programs. The first one is called the 7A Loan Program. It probably accounts for at least 90% of our total financing, and it can pretty much handle or finance any legitimate business purpose. So I already mentioned you can either acquire or construct commercial real estate for your business. You can apply for working capital. You can refinance debt. You can buy machinery and equipment, furniture and fixtures and supplies. You also can finance a change of ownership, so a business acquisition. We have three ways that can be done. You can either buy an entire business. If you're currently, a partner in a business, you could buy out your partner. And even now, we allow partial changes of ownership. So if you just wanted to buy, let's say, 50% of a business, that's eligible. Franchise operations are eligible. We do have a directory that lists all of the franchises that we have determined to be eligible. And you can have multiple purposes. So you can have, a combination of all of these things. Let's see. I don't think I'll stop yet. I guess I'll stop in just a minute see if we have any questions yet. So I mentioned the maximum loan amount under this program is $5 million. There are eligibility factors and that relate to how you derive your income. We've already covered some of that on the previous slide. Your credit history and where your business operates. The lender will figure out with you which type of program to use. We do have several subsets, and here's another comment I'll make. So it's not your job to know all the ins and outs of SBA lending programs. The lender, if they don't know all of that, they can come to me for help with that, or they may have enough SBA experience that they can walk you through what they think is the best program. So it's not up to you to try to figure all that out. We are going to send you a loan chart which outlines the different programs, but I wouldn't worry too much about that. Just let the lender talk to you about that, and then if they don't have the experience, you could refer them over to me, and I can help them with that. But we do have subsets, so we have an SBA Express loan of up to 500,000, and then we have what is called a small 7A of 350,000 or less. But again, not your job to know all about that. All you really want to know is, what is the maximum loan amount? Because will it cover what I need? And then is my use of proceeds eligible under the program? So we just covered that. The second main program we have is called the 504 Loan Program. This is an excellent program for long-term fixed rate financing. It can only be used for the purchase of an existing building or construction of a new building, and it has to be owner occupied. So we talked about that minimum occupancy requirement that you have to show if you're going to buy an existing building. So again, just like I said earlier, no investment properties, they are not eligible under this program. But in addition to buying or constructing a building, you can also finance long-term machinery and equipment. It has to have a useful life of at least 10 years. You cannot use the 504 program for, you'll see here, working capital inventory, different things like that. But especially for working capital or inventory, or one common thing that we see is we'll see a 504 loan used for the purchase of the real estate, and then the business will get a combination 7A loan for the rest of it. So you'll have the business acquisition financed as a 7A and the commercial real estate financed as a 504. We see that often. So all I'm getting at here is you can have a 504 and a 7A at the same time, as long as you haven't exceeded the maximum. I didn't mention it, but you'll see in bold for this program, the 504 program, your equity injection starts at a minimum of 10%. It may go up as much as 20% if you're a new business and or you have what we call a special use property. But again, the lender that you work with will walk you through all of that. So you're just trying to understand what's eligible under the program. The last program that I'll mention is our microloan program. And you'll see here, the second bullet there, we have specially designated intermediary lenders who provide this program. So the way this program works is we lend the intermediary lender a pool of money, and then they turn around and lend it directly to you. So you would go directly to the micro lender if you're interested in this type of loan. You'll see here the maximum loan amount is $50,000. It can be used for working capital inventory, supplies, furniture and fixtures, and machinery and equipment. It cannot be used to purchase real estate, and debt refinancing potentially could be eligible if it will improve the debt position or the cash flow of the micro borrower. I will just tell you, since we're covering the entire state of Virginia, we have right now 3 main micro lenders in Virginia. No, actually 4, excuse me, 4. And let's see, they all right now cover portions of Virginia. So we have a lender in Stanton, they cover that area. We have a lender down in the Abingdon area, they covered that area down there, but they also covered the very top of the state. And then we have a lender in Charlottesville that covers that area, but they go down into Southside Virginia. And who am I forgetting? Anyway, the point is, we don't have a micro lender right now that can lend statewide. We're working on that, but so you'll have to consult this list to see if your particular area is covered by a micro lender. Oh, I know, I forgot the other one is Northern Virginia. They cover Prince William, Fauquier counties, et cetera. Stafford, I think they go down to Stafford. Okay, so now might be a good time to pause. Lena, if you want to let me know if there are any questions. Let's see, can I see the chat?
Yes, so the Q&A function is available. Someone asked where we can find the list of eligible franchises, and I just sent that link over to them. We don't have any other questions right now, so for the participants, we encourage you to ask any questions you may have.
Okay, I see the chat, but I don't see the Q&A. Oh, there it is, Q&A. Okay, and you sent our okay, yes, you found the franchise directory. Okay, great, great. Okay, so let's continue on. Okay, so we when we mentioned this webinar, we told you we would give you an overview of our SBA lending programs and then what you should do before approaching a lender. So as you'll know, with most cases, the better prepared you are, and how well you present yourself in your business, et cetera, will lead to a more favorable outcome. If you should have either a written loan proposal or a business plan, and of course, we're hosting this with the SBDC network so they can help you with the business plan. I will send out. We did a webinar earlier this year on how to prepare a loan proposal. If you want to compare the loan proposal versus a business plan, when I think of a loan proposal, it's more streamlined and tied specifically to obtaining a loan. Your business plan is the overarching document for your business as a whole, but the loan proposal is more focused on the particulars of your loan request. So I'll send you that later. But before you approach a lender, you should have four main things in mind: how much money you need, and just to comment on that. So business lending does not work the same as a auto or mortgage loan. So when you want to buy a car, I just bought a car recently, you reach out to the lender and you say, well, how much do I qualify for? You might do the same thing with a mortgage loan. That is not the way that business lending works. So you should never go to a lender and say, how much can I get? Or how much will you give me? You should always come to the table with a dollar amount to give the lender, how much you're applying for. Now that may change. The lender, depending on the lender, they may have some guidance for you, and they'd say, hey, maybe if we do this over here, you might be able to reduce your loan amount, or they might see something and they say that you actually may need a little more than what you've applied for. But you at least need to come to the table with a set dollar figure as a starting point. And then once you have that figure, you should have a breakdown of how you use the money. If you're going to buy, well, definitely if you're going to buy real estate, you need to have the cost of that. But you need to break that down by how you use the money. The third item there, how you'll repay the loan. That is the primary reason. I mean, if you think of yourself, if you lend your friend, let's say $100, what is probably the most important thing you're thinking about is how you're going to get your $100 back. So that's the way lenders tend to think. They want to see how their loan is going to be repaid because they have to answer to those above them. And then finally, what will you do if your business is unable to repay the loan? That's where collateral comes in to play. I did mention earlier that if there's a shortfall, potentially that's a very common reason that lenders will use our programs, but you should at least be able to initially outline for the lender what your collateral is. To help determine your ability to repay the loan, lenders will order a copy of your personal credit report, and depending on the lender, they potentially could also order a commercial credit report, which would be a report on your business. One recommendation, well, first of all, you'll see there, you're probably already familiar with the three major credit bureaus, so Equifax, Experian, and TransUnion. But before you submit your request to a lender, we highly recommend that you pull your own copy of your credit report, and you can also pull your score to clear up any errors. I saw an article, I forget how many years ago this was, that potentially 25% of all credit reports have some sort of error in them. So it's best to check on that yourself. You'll see the third bullet here. I do this myself personally. You can get a copy of the of your own credit report, personal credit report from each of the three credit bureau agencies once per year. It's free of charge. Now, you may see some other websites where they want you to pay for this, but this particular site is free. It won't give you the score, but it will give you a copy of your credit report so you can see what is on there and clear up any errors before you approach a lender. Again, I do that myself, and I can attest to the fact that it is free. If you need help in repairing your credit history, I don't know if the SBDC helps with that, but there is the State Corporation Commission publishes a list of credit counseling services. Now, it's still up to you to do your due diligence to make sure that the counseling service you're working with is reputable, but they do provide that list. And then for the commercial side, so the business side, you've got Dun & Bradstreet, Experian, and Equifax. I've given you links here. You should be able to find just the minimum information to see what they have on file for your business. But once you get beyond that, they do start to charge for some things. I mean, I know one thing you can sign up for is a monthly monitoring of your credit report. But it's your choice whether you want to pay for that additional information. The other thing, I don't know, I didn't put this on the slide, but we also earlier this year did a webinar on how to establish business credit, personal and business credit. So I could also send that out, which has some more information on that. So in terms of what a lender will look for when reviewing your application, your business loan application, they look for owners and operators of good character. The two main ways that they're going to assess that is, we already talked about this, your credit history, your willingness to pay your personal debts, and definitely if you're in business, also your business debts. But and then we talked about the few cases where the business potentially could be ineligible due to a past criminal history. But we have streamlined that a lot. It used to be much more expansive than it is now. So it's limited to those categories I mentioned earlier. A feasible business plan. So you, again, can obtain help related to that from the SBDC. Management expertise and commitment necessary for success. So one item there, and we're going to cover this later, they'll ask, you should provide to the lender your own background in managing a business or running your business. But if you have decided for some reason that you're not going to be at the business on a day-to-day basis, you need to explain to the lender who is going to cover those duties and what their experience is. So if you're going to have a hired manager, you need to explain their background and, I mean, preferably, your oversight of them on a day-to-day basis. Sufficient funds, including the SBA guaranteed loan, to operate the business on a sound financial basis. We'll get into this later. If you're a startup, projections become critical, and the assumptions behind those projections are very important. But the lender wants to see that there's sufficient funds there to, again, operate the business. Adequate equity invested in the business. I already told you under the 504 program, we set the equity at 10%. Under 7A, we also set a 10% minimum for startups. But beyond that, it's the decision between you and the lender. So they'll ask you for that, and you should put that in your business plan or your loan proposal. We already talked about sufficient collateral. So again, if there's a shortfall, that's fine, but just identify what collateral is available, whether that's business or personal. And then I put this last item in red. I already mentioned this. So the primary concern for the lender is their ability to be repaid on time from projected operating cash flow. So that's their primary concern. Some common questions we get about applying for an SBA loan. So you do not apply directly to or through SBA. You always need to work with a SBA participating lender. We're going to provide you information on that in a few minutes. But we don't accept applications here. You would give all of that to the lender. And then in terms of the paperwork, this slide deck is designed to give you an outline. It can't cover everything because each application may be different. But we tried to well, we covered just the basics for everyone. And here's where, so my other fault, I already told you I put too many words on slides, so that's my fault. My other fault is I tried to break things down so that you can understand by program potentially what you might be asked to provide. So we'll see how this webinar goes. If you have any comments on this, if you want to know less than what's on here, you say, well, I don't need to know all this. Although a lot of these things are things that just for general business lending, you would need to provide anyway, but we'll see how this goes. So first of all, I'm outlining on the next few slides what SBA requires in terms of documentation, but the lender may ask you, it shouldn't be too much more because this is very extensive, but they may have some other information that they want to see from you. But for the 7A program, we have one application that you have to fill out. It's a form 1919, and one person signs that form on behalf of the business. They call them an authorized representative, and you would just submit that to the lender. A personal financial statement is going to be required, I would think, in almost every case. Yes, every case that I can think of, all three programs that we mentioned. So, and that will be required from every 20% or more owner of the business and any guarantors. We require that it be within 120 days of submission. And we have a form that the lender can use, but they don't have to use that form. So I only put this form here. If you wanted to get an idea of what a lender would ask for on that form, this can help you be prepared. So you could click on this link when you get the slide and see what is on that form 413, and that will give you an idea of what the lender will ask you for when you apply for the loan, so you can get yourself prepared for that. This fourth bullet here is specific to SBA. So if the lender's charging a fee that is not an SBA fee, and it's more than $2,500, there's a form that has to be filled out. That's just sort of a bureaucratic item there. The last bullet here, the lender is required to obtain federal business income tax transcripts from the IRS for the last 3 years if you've been in business for that long, or up to 3 years. And they're doing that to determine two things. One, the business is small, and the most important, which is why it's highlighted in yellow here, is that the financial data information that you submitted to the IRS matches what you've given to the lender as part of your application. I can tell you during the pandemic, we ran into this more than you would expect, where a business we had a direct lending program. The business came to SBA directly. We checked with the IRS. The financial information that the business had given to us did not match what they had submitted to the IRS. Generally, that's considered fraud. So it didn't go over well, and they didn't get a pandemic-related loan. So just be sure that what you're submitting to the IRS matches what you've provided to the lender. In general, you're going to be asked to provide the last 3 years of business financial statements, which So it could either be the last 3 years worth of business income tax returns or business financial statements. So even though the lender is going to the IRS and obtaining those transcripts themselves, that does not remove the requirement for you to submit the actual documents to the lender. So what the lender does is they get the transcripts from the IRS and they compare it to what you have given them, the financial statements or tax returns. And then I think I'll skip, okay, this last bullet here, I'll just mention here again, it's not your job to know about all our lending programs, but for our small 7A, which are loans of 350,000 or less, there is a minimum credit score that is set by SBA. It's a combined commercial and consumer score. This range, or the score is not going to be useful to you. It's 165, but if you think of all of the range of scores from top to bottom, it's sort of in the middle. But again, the lender is responsible for that. You're not responsible for that. So just an FYI on that. You will be asked by the lender to provide evidence of all licenses and formation documents required to operate the business. So for example, a business license, articles of incorporation, partnership agreements, etc. As mentioned before, you'll need to provide a description in the history of the business. The nature of the business, the industry that you're in, length of time in business under current management, depth of management experience in that industry or related industry, and then a brief description of the business's management team, including the principal, and by principal they mean the owner's involvement in the daily on-site management, as I mentioned earlier. And if they will not be there on-site daily, they want to know who will be, the hired manager, what their experience is. If the above information is in your business plan, that you don't have to submit a separate document outlining that information. So I mentioned this a minute ago, and this is probably where I need to update my slide to have less in it. But so for existing businesses, you need to have the last 3 years worth of business financial statements and/or tax returns. In addition to that, you'll have to provide what they call an interim financial statement, which is no older than 120 days upon submission to SBA. And then if your historical cash flow for the most recent full year and interim statements do not show sufficient debt service coverage, then the lender is going to ask you to provide projections, and the SBDC can help you with that. And then especially, I already mentioned this, if you're a new business, you'll have to have detailed projections. Generally, those will have to be month to month, at least for the first year until break even. And we've given you a template here for how to prepare that. Of course, the SBDC can help you with that as well. We talked about the equity injection, so you should address that when you meet with the lender. Tell them how much you can inject into the business, especially if you're a startup. We mentioned that SBA has a minimum of 10%. For existing businesses, you would need to provide a breakdown of your outstanding business debts, including any shareholder debt. And if you're refinancing a debt, the lender will ask you for a copy of the promissory note and a payment schedule showing that the debt has been current and is currently current, has been current for 12 months and is currently current. If you're renting space, you need a copy of the lease. The lender will ask you for that. We talked about the franchise. Now, checking the franchise directory, that's the lender's responsibility, but in terms of your responsibilities, you will be asked by the lender to provide a copy of the franchise agreement, what they call the franchise disclosure document, and any other documents that the franchisor is requiring you to sign. Also, any federal, state, or local citations, which would preclude the applicant business from normal business operations. You should discuss any liens, judgments, bankruptcy filings, or pending litigation, including divorce proceedings. Just a couple of comments on that. So SBA does not have any prohibition or hard stop if you have filed bankruptcy in the past. We don't, in other words, we don't have a, just a flat out, we just say no if you've had a past bankruptcy filing. What will happen is you should disclose that to the lender. You can explain to them what happened. And then what they're likely to look for and what we would is a reestablishment of credit. So if you, let's say filed bankruptcy, I don't know, 5 years ago, but you have, applied for new credit and you show a current payment history since then that's going to be a positive. But we don't have again, a fast or a hard stop on that in terms of a lending decision. And then in terms of divorce proceedings, the main thing that the SBA looks for related to that is, let's say you're in the middle of a divorce and you haven't finalized, let's say there's a home or maybe there's additional property, a vacation home, and all of those things have not been finalized yet. It's likely to be difficult to finalize the loan approval, especially when you get into larger loan amounts, SBA loan amounts, until that divorce proceeding has completed. In other words, you have actually a written document that outlines who will own all of the assets of the two parties. If you're buying equipment, inventory, or other assets, you should have a detailed listing of what will be purchased and cost quotes. And we've talked about collateral over and over again now. You should provide just an outline of the business collateral available and then any personally held collateral to be offered. I can tell you that for our larger loans, for our smaller loans, SBA does not generally require that a personal residence or personal investment properties be taken as collateral. But definitely for our larger loans, for those loans over 500,000, the lender is required to look at any personally held real estate. We mentioned buying a business earlier, so you would provide to the lender a copy of the buy-sell agreement. Just the second item here is just an FYI for you. It's not something you need to handle, but it's just information for you. So the lender will either be permitted to prepare a business valuation themselves, or in some cases, they may have to go out and get an independent third party to do that. And there will be a cost to you if they have to go out to that independent third party. But again, the lender will handle that. And the purpose of that business valuation, which does help you in the end, it will justify the purchase price. So let's say the seller is saying, okay, the purchase price is $1 million, but the business valuation only comes in for $750. As the SBA loan cannot finance more than the $750. And it also could be, potentially, I don't know, at that stage, potentially a negotiating tool, although you may be beyond that, or you could make a decision that you just don't want to move forward. It will just give you more information than you had before. And just an FYI, SBA cannot or will not accept a valuation that was ordered by the seller or buyer. This business valuation has to be ordered by the lender and addressed to the lender. There'll be a requirement for a pro forma, what they call a pro forma balance sheet for the business being purchased. So that will show the breakdown of the assets and liabilities and equity as of the date of the transfer. You will be required to provide the last 3 years worth of the seller's financial statements. So the financial statements on the business that you're buying. And those will need to be provided. And then it's an interim statement, just like I mentioned earlier. So we require an interim statement that's no older than 120 days. And just there, you'll see the bold note there. An SBA loan cannot be used if you just have a willing buyer and willing seller. We want to see some sort of benefit to the business as a result of the change. So a couple of examples of that. Let's say you have someone who's run a business for 30 years, they want to retire. If they didn't sell the business, they would shut it down. That's helping preserve the existence of that business. And the other example, let's say you had a hired manager the owner put a hired manager in there. He hasn't really done a great job, and your plan is to build that business back up. You have plans for how to build that business back up. That might be another example. If you're buying real estate, you would need a copy of the signed purchase agreement. And then it's not your responsibility either, but in some cases, depending on the property that's going to be purchased, there might be an environmental investigation depending on the past uses of that property. And again, that's just an FYI for you in case, because there will be a charge for that, but you don't have to worry about any of that. It's just informational purposes. A couple of notes for closing costs. So the lender is permitted to collect from you, the business, necessary out-of-pocket expenses. So, filing, recording fees, photocopying, delivery charges, collateral appraisals. We already talked about that, environmental investigation reports. So they are permitted to charge for that. And if your loan request involves the acquisition or construction of owner-occupied commercial real estate or the business acquisition, I just mentioned that cost will be passed on to you. So the cost of the appraisal and or the valuation will be passed on to you. Okay, so I'm going to stop and see if we have any questions now, since I'm now going over to the 504 program.
Yes, Ford. We have a few. So the first one is, does a felony conviction disqualify you?
No. Well, okay, I'm going to skip back because the only requirement we have now, I'm going to skip back over here, is, and hope you can see my screen. So the last bullet here, the way it works now is, so in the past, what would happen is if you had a felony, you would have to get fingerprinted and you would have to go through this process. We got rid of all of that. So the application has a question on it and it asks, are you currently incarcerated, serving a sentence of imprisonment, or under indictment for a felony or any crime involving financial misconduct or a false statement? So if you answer that no on the application, then you move forward. If you fit into any of those categories, then you would have to answer yes, and you would provide to the lender the circumstances. So if you're talking about a felony that involved, I mean, I'm not the best expert on crime, but something other than financial misconduct, then you would just disclose that to the lender. And again, it depends on how you answer the question on the application. So there's no background check now. We don't do any background checks. And I guess it would depend on why you were charged with the felony. I mean, as an example, let's say you were charged with, I don't know, I'm trying to think of an example, but I would just say, answer the question on the application. If you can't answer it no, then just disclose to the lender what happened, and then they will work with you on that. But there is no hard and fast rule where if you have a past felony, other than what I've read to you here, that would exclude you from applying for a loan. So I hope I answered that well enough.
Yes. Credit history was mentioned. Is it just the owner's credit history, the businesses, or depending on the size of the loan, a combination of both?
Okay, so in almost every case related to business lending, I mean, you might think, okay, well, this is a business loan. Why do they have to look at my personal credit history? A couple of things there. We mentioned that your personal credit history helps the lender make an assessment in terms of your willingness to repay your personal debts, but they're gonna, I would say 100% of them are gonna look at your personal credit history. Some lenders choose to either look for the business credit history or not. It depends on the lender, so you can ask the lender. Years ago, we used to actually order Dun and Bradstreet reports. I mean, this was a long time ago, and the information was not that helpful, and it was the cost was not minimal. So we, some lenders decide not to do that, but at a minimum, they're going to get a copy of your personal credit report and look at that. And then some of them will also obtain the business credit history.
Wonderful. Can inventory be used for collateral?
Yes, absolutely. And in fact, if you're going to use an SBA loan to buy inventory, the lender will be required to take that as collateral. So yes, it can be used as collateral.
Perfect. The same goes if you're purchasing a building or a
Yeah,
space, right?
anything that the SBA finances, the lender is required to take a first lien against that asset. Yeah,
Mhm.
take that as collateral.
Is it harder to qualify with a new business or franchise that is not already submitting tax returns?
Okay, related to new businesses, so uh, I will say that you heard me say at the very beginning of this webinar that our guarantee helps with startup businesses. But I will tell you that even though we encourage lenders to make loans to startup businesses, it is the lender's choice whether they're willing to do that. And some of them may still not be willing to make loans to startup businesses. So I mentioned uh, the webinar that we did earlier this year on establishing personal and business credit. In that, we talk about potentially when you're first starting out, you may have to rely on things like credit cards and things like that until you can reach a point at which the lender will be willing to consider it. But I mean, the hope is, and here's what we hear a lot from lenders is if you have a past experience in the industry that you're starting, the business in the industry you're starting, or you have past management experience. So let's say it wasn't your own business, but you ran somebody else's business and you can explain that to a lender, that's going to help you if you're a new business. So I would definitely mention that in your proposal or your business plan. Um, but again, there still might be some reluctance there. In terms of franchises, uh, generally you're not going to start as a franchisee unless that franchise model has been around for at least long enough for it to be established as a franchise. So you shouldn't really run it. Actually, so if you're starting out as a franchisee, one benefit to the franchise model, of course, is that the franchisor has already worked out that model, and there's a track record and some success related to that. So that could actually help you to some degree. Um, but I would definitely, and this may be where the SBDC can help you with this, definitely research that franchise and be sure that you get all information possible about the performance of that franchise before you enter into any sort of franchise agreement.
Wonderful. What loan amount goes up to 100,000? I thought it was a microloan program, but I think I heard that was 50K.
So the microloan, yes, the maximum is 50,000. For 100,000, you could get a 7A. A 504 would not work for that loan amount. So 7A is mainly the only option. And I don't know, we may run out of time, but um, well, we haven't gotten there yet. So later in this slide deck, you'll see I give you a link to SBA lending, what they call them SBA lending reports. And one way that report can help you is it gives each lender who's made at least one SBA loan, it'll give you the number of loans, the total dollar, and then the right-hand column says average loan size. So that can help clue you in on which lenders are lending in the average range that you're looking for. So if you're looking for 100,000, you could look at that column and see if that lender is lending in that range, and that might help you.
Can you apply for SBA loan if you have a pending green card application?
So the key word there, I think, is pending. which would lead me to likely say no, because if you actually have the green card, that's a different story. But if you're just applying, then potentially that could prevent you from applying. Now, if you want to, you'll have my contact information later. If you want to reach out to me and just explain to me where you are in the process, but when you say pending, I'm thinking the answer will be you'll have to wait until that's finalized before you can apply for the SBA loan.
If you have an open SBA EIDL loan, can you request a loan advance versus applying for a new SBA loan?
Okay, so the SBA idle loan, what I mentioned earlier, we had pandemic-related loans, and that's what this person means by idle loan. So no, you cannot request a loan advance on that idle loan. Once that loan was made and approved, that loan amount was set, and you can't ask for an advance. You have to apply for a new SBA loan. And the difference there is the idle loan was a direct lending program. I told you that was that we make disaster loans directly to small business, and the pandemic was considered a disaster. But if you applied for a new loan, you would apply under the programs that we talked about today.
Final question for now.
Yeah.
Is there a program for a spouse of 100% service disabled veteran that doesn't require any equity or capital injection for startup?
So I don't have in this slide deck, but this prompts me to mention just one thing here. So we do have, I told you, I'm going to back up here to this slide. So I told you on the 7A program, wait a minute. Oh, here it is. We have subsets of the 7A program. One of them is called SBA Express. And just an FYI, before I answer your question, if you have a business that is at least 51% owned by either a veteran, it can include their spouse, it can include National Guard members and reservists. If at least 51% is owned by all of those parties or any of those parties, we are waiving. There's normally an upfront fee with every SBA loan, but that fee is waived for what we call veteran type businesses. So I just want to mention that before I answer the question. So the equity or capital injection, we don't have any special consideration for veterans. It's the same policy applies as it does for everyone else. So we don't have any elimination of that requirement for veteran-owned businesses. But the fee waiver, and it does include spouses, is in place under the Express program, and that goes up to $500,000.
Wonderful, thank you. Those were all the questions. We do have 1 minute. I don't know, Ford, if you would like to run us through the last slides quickly,
Yes,
or
we're getting close. We're almost at the okay. So I'm not going to cover this, but so under 504, the things that I've covered are going to be very similar. If you wanted to take a look at the actual items, I've outlined them here. So you can look, I provided you a link here and you can look for yourself. And then for the microloan program, it's going to be basically the same of, what I covered earlier, potentially probably less since it's a microloan, but the lender will outline for you what that documentation is. Just some additional advice. I talked about the projections earlier, and this is where the SBDC can help you. One very important aspect of the projections are that the assumptions underlying those projections are very important. If you go to the lender and you give them projections and they call it pie in the sky, if they're so unreasonable, number one, that will leave a bad taste in the lender's mouth, or in the lender's mind, and you just need to make sure that the projections are based on valid assumptions. And again, the SBDC can help you with that. And most lenders will compare your projections to some sort of industry data. Risk Management Association is generally the main source for that. And I've given you a link here for some of the industry data they might be looking at. And then the last item here, we hear this from lenders a lot. So let's say you go to a lender, apply for the loan, then the lender sends you an email back or some sort of correspondence back, and they say, I need these 5 items, but you only return one of those items to the lender. What they tell us is, the lender, if you just return one of the items, the lender cannot move your application forward. So the best thing to do would be gather all of those 5 items and then return all of them together to the lender, or the lender's just going to put your application on the back burner and wait until you've submitted the rest of the information. And we're the government, so we get a lot of bashing, but what we've heard from lenders is that most of the delay in the application process is caused between the back and forth between the lender and the borrower, not necessarily SBA. So that's a couple of tips there. I mentioned that we had the list of Virginia SBA lenders, so you'll have this link. It will outline for you which ones are express lenders. And then we also have lender match, which, so you say to yourself, okay, well, you're giving us this list. Why do we need another avenue? So this list is maintained by our office, and it covers Virginia, but we may not have every lender on that list, or there are many out-of-state lenders that will make SBA loans. So the benefit of using lender match, in addition to that link, is that it could put you in touch with some out-of-state lenders or out of your area lenders who might be willing to lend to you. I do just want to mention one caveat related to lender match, which is every lender on that lender match system is an SBA lender. However, some of those lenders may have partners that they work with, non-SBA partners, and they may refer you over to those other entities. But once you get outside of the SBA world, we have no control over the interest rate that's set or the maturity that's set or any other of the other financing terms. So it's up to you to exercise your due diligence to be sure that you're not getting into a situation that you don't want to get into. But the way the system works is you go to the site. You do have to have a username and login, so I apologize for that, but you enter information about your business and the loan that you're looking for, and that will get sent to any lender who has signed up for where your business is located. If they're interested in having a conversation with you, they will opt in, and then you will be provided with a list in Lender Match of those lenders, and then you can opt in to have a conversation with them. But again, just be sure, if they send you some information back and you say, well, this doesn't sound like an SBA loan, because I know under SBA sets maximum interest rates and maximum terms. So if you see that, you may want to ask the lender, well, is this an SBA program? And then if it is not, again, it's your choice whether you enter into it, but it's not something we can control once you get outside of our lending programs. I mentioned the lending report. So as I mentioned earlier, it can clue you in on which lenders are most active, and then the average dollar size can help you identify lenders that are lending in the dollar range that you're looking for. Our office, you'll see we cover all of Virginia except Northern Virginia. So we don't cover Arlington, Fairfax, Loudoun, and those independent cities there. So for those lending reports, I've provided you a link to the Washington, D.C. Metro office, and you can look that information up there. I did want to mention we have an upcoming webinar. I talked about the 504 program. So if you do have a need for owner-occupied commercial real estate or heavy equipment, this is actually going to be presented by the 3 lenders that are authorized to make these loans. So you're welcome to participate in that, and there'll be a registration link. And then there's my contact information if you have any questions. And we'll see if there are any more in the Q&A.
There are 2 more questions. Are there incentivized loans similar to government contracts?
So we don't necessarily incentivize those, lending for government contracts, but I will say that if your need is $500,000 or less, I would say the best first avenue to consider is the SBA Express program. The reason I mention that is under Express, the lender gets to default mostly to their internal policies, so they don't have to follow, specific policies that we set. But you can get lines of credit, which is a common, need for government contractors. So I would first look for SBA Express lenders. If you get over that, we do have a program that can finance that. And if your need is over that, you could contact me and I can provide the information on that. It would be too much information to cover now, but I would just look at SBA Express if your need is $500,000 or less, and then if not, you can reach out to me.
Are interest rates typically higher for SBA Express loans?
So two things there. Our interest rate, I told you we set maximums, and the maximum interest rates under all of the 7A programs that I covered, including Express, are the same. So just in terms of what SBA sets, no, the rates are not higher. And then just an overall comment about interest rates. So SBA sets maximums, and you'll see that on the chart when we send it out. But the market and your personal circumstances will drive a lot of the interest rate. So if you have great personal credit, that's definitely going to help you. They're just different considerations. The lender knows you can potentially go down the street and apply with another lender, and you'll see what the market rates are for that. So not necessarily higher under Express. It will just be based on the lender and your personal circumstances.
All right, last question, and we will have to finish the webinar. Where can we find the list of SBA Express lenders?
Let me go back just 1 second here, and I'll show you this again.
I can provide the link to.
Yeah, I was just gonna, so I told you we provide this list. On this list, when you go here, it'll tell you which ones are Express lenders. Can you see that on the screen, Lena?
Yes, I can see it.
Yeah.
And I just sent that link to on the Q&A as well. You will have access to those slides too after. Well, Ford, thank you so much for the presentation and all the knowledge that you've shared. It was wonderfully laid out, and we look forward to having you again next month.
Okay, thank you very much, Lena.
Thank you all for coming, and hope that you have a great rest of your days.